My name is Mathew Cassidy, Managing Director, and welcome to the March 2020 Investment Markets Update, where I'm joined with Jonathan Bates. Welcome, Jono.
Thank you.
So, Jono, how did things play out in 2019?
Yeah, it feels like a long time ago now, but I mean, it was a really good year at the end of 2019. Returns proved to be really quite strong across the board. Aussie equity portfolio did well in the second half of the year and outperformed. And there was a lot of euphoria as we went into the start of 2020. Valuations were near a 20-year high. There was a lot of optimism around the China trade deal with the United States, and there was a real uptick in US economic indicators, giving people some reason to believe that this year was going to be a strong year on the economic front.
Yeah. We had a investment committee meeting mid to late January. We looked at valuations. We decided to make some decisions. Can you talk us through those decisions? And thankfully, we've been on the front foot there.
Yeah. So the four-man investment committee, we sat in January. Performance had been really strong. It was probably the first tactical asset allocation decision we made in a few years, but felt like valuations had run a little bit ahead of themselves. As I said before, we were at 20-year valuation highs in the US and in Australia. Underlying corporate earnings had not been following through with share prices, so there was a bit of a disjunct there. And we felt that maybe the market was potentially pricing a little bit too much of an optimistic outcome. By no means do we expect the virus to turn up in the manner that it did, but often it's those things that you don't foresee that trip you over.
So can you talk us through why are people so concerned about the virus, and how's that playing out in markets as we see it at the moment?
Yeah. Well, it's been a dreadful few weeks on the equity market. Most people would have seen markets down, broadly speaking, 15% or so as we stand here in early March. And no sort of end up in sight in the very near term. I mean, we've got to remember this is a virus, so it's very hard to predict. The one thing that markets really hate is uncertainty, and it's likely to be with us for a few months. And so markets are fretting about the impact of the virus on restricting movement of people. So the quarantine issues are the things that are causing markets concern, because there's a swathe of industry that has just seen business stop still, tourism, entertainment, and the like. Italy, literally this morning, have announced the quarantine of the whole country. So there's a lot of businesses that have seen business effectively stop. We're going to see job losses in most countries around the world on account of it. And because of the heavy build-up in debt that we've seen over the last decade, really, there's a concern in investment markets now that, where in the past we were worried about return on capital, now it's a question in certain areas, again, only small pockets, but, return of capital.
Yeah. And what companies will perform well through this period, if any, or what companies do we need to be very careful of, and what are we seeing across our portfolios?
Yeah. So you want to avoid balance sheet leverage for one, and those in the travel industry obviously have been a very obvious place to be impacted. We've been hurt a little bit on Webjet, which is just an incredibly strong company, got a great corporate balance sheet, but at the moment they're in the eye of the storm in terms of bookings. So avoiding balance sheet leverage and sticking to those companies with really good cash flow and defensible earning streams. So they don't have to be the high-growing names. Telstra probably should do really quite well in this environment, but on the pullback, companies with good growth prospects such as Afterpay again and Altium should do well. Pullback in Challenger should make for a good opportunity. So, yeah.
So how active and how nimble are we when we see these opportunities? We've obviously got some cash available. What's the point at which we start to look at some companies and start to press the buy trigger?
So, I mean, we've got cash in both the Australian equity portfolio and, more broadly speaking, having de-risked the portfolio in January, we've got potential to go back into equities with that money we took out. So we've got a lot of opportunity. And we made a little bit of a nibble, I think, a week or so ago with Altium and with Telstra. I think at the time I said maybe we'd spent a quarter to a third of what we could spend. We haven't spent any more since then, despite the fact that markets are down. because whilst we might be nearing a low, and that's a big unknown, you want to be buying something when people are expecting to bounce again. And I think for the next couple of months, it's going to be a volatile and mixed market.
What about the measures that the government's put in place? We've obviously seen a rate cut here in Australia, also a 50 basis point cut in the US. Will we start to see this play out, and any comment on that policy?
Yeah. We'll get another rate cut here. We'll get rate cuts, I suspect, in the US. Who knows how they'll do it in Europe, given where rates are there. Definitely we'll get further rate cuts in China. But I guess the question is whether or not monetary policy can do the heavy lifting it did in the past. And so I think there's an increasing view that we'll see fiscal policy. And fortunately in Australia, we're in a very good position to be able to enact fiscal expansion. We all moan that we're not in a surplus that we were in 10 or 15 years ago, but net debt to GDP in Australia is well down on what it is globally. We're at about 40%. Take for an example, Italy, it's at 140%. The United States is about 100. The UK is just short of 100. So we have a lot of firepower that should the government want to deploy it, that they can re-stimulate the economy.
Yeah. Does volatility create opportunity or something else, Jono? What's your call?
I think for us, historically, it creates opportunity. We do trade, particularly the Australian equity portfolio, we do nip and tuck. So, we were fortunate to sell some Challenger, some Downer, Pendle, Afterpay near enough to the highs. Obviously, we sold out some of the equity positions to go into defensive assets as well. So I think for us, it works well. The famous last words.
Yeah. I think like all times, really important to touch base with your advisor. Make sure that your portfolios are well structured for the volatility. And of course, we're always here to help no matter what the situation. Thank you.